OKX just shipped plain English AI agents for earnings week. OKX announced Agent Trade Kit on April 20th, 2026, a tool that converts plain language instructions into automated trading strategies. The exchange framed the launch around tech earnings season, where the volume of single-name catalysts overwhelms manual screening. The post landed at 0035 UTC and is a direct push into the same agentic trading category that has been bleeding from on-chain projects into centralized venues for the last quarter. The tweet itself is the only confirmed source so far, but the framing is specific. Hundreds of movers per week, manual tracking will not keep up. The kit is the answer. That is a product positioning, not a marketing tagline. It points at a defined use case, not a generic AI feature. What plain English actually buys traders. Most automated trading rules historically required either a query language, a JSON template, or a click-through builder. Each step adds friction and pushes casual traders out. Agent Trade Kit collapses that into a sentence. A trader can presumably write something like, buy NVDA exposure if it gaps down more than 4% on earnings, and the agent translates the sentence into the underlying order logic. The trade-off is precision. Plain language inputs are ambiguous. Gap down can mean the open versus prior close, the open versus prior low, or the open versus a moving average. The agent has to pick one, and the trader has to trust the pick. That gap between intent and execution is where every previous AI trading product has either gained credibility or lost it. OKX has not detailed which markets the kit covers. The earnings season framing suggests equity-linked exposure, likely through tokenized stocks or perpetuals on tech tickers, both of which OKX already supports. A confirmation on supported instruments will determine whether this is a niche pre-market tool or a broader retail product. Why the timing is not coincidental, Q1 2026 earnings season runs through late April and early May, with mega-cap tech companies reporting in clusters. NVIDIA, Microsoft, Apple, Meta, and Alphabet routinely each move 5% or more in after-hours trading on report nights, and crypto-correlated names like Coinbase and Strategy add another layer of volatility for a crypto exchange's user base. Launching a structured trading product the week earnings begin is a real bet. If the kit performs well during a noisy window, OKX has a marketing case study. If it misroutes a meaningful number of orders, the same window magnifies the damage. Exchanges do not usually ship new order routing surface area into peak volatility unless they are confident the plumbing has been stress-tested in less visible conditions. The bigger picture, agentic trading is no longer a thesis. Agentic trading was a venture deck slide for most of 2025. By April 2026, it is a shipping product across categories. On-chain, Banker just crossed $500 million in cumulative Uniswap volume routed through plain language agents, with daily volume averaging in the 8 figures. That is the on-chain proof point. OKX shipping a centralized version is the corporate response. The competitive pressure for centralized exchanges is straightforward. If on-chain agents continue to compound user time on platform, CX order books lose the casual discretionary trader who used to click around the spot screen. Agent Trade Kit is OKX's answer to that drift. Binance and Bybit have both teased similar products in earnings calls and developer events. OKX is the first major venue to put a named product into market. What can go wrong? 3 things in roughly the order of likelihood. First, prompt drift. Users will write strategies they cannot verify, hit submit, and then dispute fills when the agent's interpretation does not match their mental model. OKX will need a transparent, "this is what I am about to do" preview, and the burden will be on users to read it. Second, leverage scaling. Plain language inputs make it easier to take large positions without the friction of manual order construction. That is the feature. It is also the danger, especially in earnings windows, where single names can move 10% in a tick. Third, model failure modes during illiquid hours. After-hours equity-linked markets thin out. An agent that interprets a directive correctly during regular hours may execute the same intent into a 50 basis point spread at 4:15 p.m. ET. The product will be judged on those edges, not the median trade. What it does not change, this is a trading product, not a payments product. Traders who already use a crypto card for spending will not notice anything different about the funding side. The connection between trading PNL on OKX and a card balance is the same as before. Realized gains can be off-ramp to fiat or moved to a stablecoin balance. Agent TradeKit does not extend into the spending side of the OKX product surface.